I now hand the conference over to Mr. Rishabh Barar from CDR India. Thank you, and over to you, sir.
Good day, everyone, and thank you for joining us on this call to discuss the Q4 and FY21 earnings for Suven Pharmaceuticals. We have with us Mr. Venkat Jasti, the Chairman and Managing Director, Mr. Venkatraman Sundar, Vice President Corporate Affairs, and Mr. Subba Rao, the CFO, Suven Pharmaceuticals. Before we begin, I would like to mention that some statements made in today's discussion may be forward-looking in nature and may involve risks and uncertainties. Documents relating to the company's performance have been mailed to you earlier. I now request Mr. Jasti to share his perspectives on the performance and outlook. Over to you, sir.
Thank you. Good morning to everyone. I hope everybody is staying safe during this unprecedented pandemic. As you could see, this call is for the Q4 and fiscal 21 results. As you could see, if you see the quarter-on-quarter basis, it is less both in terms of the top line and also in the PAT. And it is mainly due to the product change mix is one of the reasons. But when you see year on year, then we have about 20% growth in the top line, which is in line with what we've been saying. But when it comes to the PAT, it will be about 14%. We're expecting around 20%. This is mainly due to various reasons, as you know. One is the pandemic-related activity. More or less, it's a pandemic-related activity, which gave the cost increases in the human capital, the logistics, and some of the raw materials, and the increase in the utilities and all that stuff. I think that led to the projections not being met. And it is, to be honest, it's very challenging to do this, and happy to mention in our 32 years history, we have first time crossed the 1,000 crore mark in the sales. But to maintain that, we think we challenge with this unprecedented pandemic. The second wave is much more giving effect on our operations. As I was telling you, because 15 to 20% of the people are getting affected directly or indirectly. That means even if family members are affected, they cannot come, and so that will become an absenteeism. And again, the logistics gone up sky high, and the availability of the containers, and of course, this oxygen requirement also led to the shortages of some raw materials, and some of the raw materials prices have gone up by 4 to 5 times also temporarily, which also affects the things, both in terms of the availability and also in terms of the pricing. And because of these things, some delays are happening as of now. But Europe and US being coming to normal, the business is looking steady, and we have a good traction on the going forward. Hopefully, we'll do better. The only catch here is whether the third wave will come. It will derail our operations in India, not necessarily Suven, but everyone. So we are keeping our fingers crossed. Otherwise, we are in good shape with these problems that are present also. I think I will stop at this time, and I will answer the questions which may give you better clarity.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Anyone who would like to ask a question, please press star and one at this time. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Anyone who would like to ask a question, you may press star and one at this time. The first question is from the line of Shirish Jain from APX Capital. Please go ahead.
Good morning, sir. Thank you for giving me the opportunity. Sir, I see the previous year figures in the current financial statements look very different from our FY20 annual report. Any reason for that?
Okay. Can you repeat your question?
Sir, in the cash flow statement of current year of FY21, the previous year figures are very different from what was given in the annual report FY20. So any specific reason for the readjustments?
Probably we'll move on to the next question and then we'll clarify this as we go on actually. Yeah.
Okay. Thank you, sir. That was all from my side.
Thank you.
Thank you. The next question is from the line of Cinderella Carvalho from Centrum Broking. Please go ahead.
Yeah, thanks for the opportunity. Sir, am I audible?
Yes, you are audible, ma'am.
Thank you. It's heavy rain here, so it was just confirming. And sir, good results in terms of top line. If you could help us understand in terms of a full year review, in terms of gross margin, how should we look at it? And the specialty manufacturing costs, should they normalize going ahead? As I understand that there should be a pass-on clause available.
Yeah. See, the profit margins are based on the product mix. And if you go back quarter on quarter, it's very difficult, but year on year, it will be more or less in line with whatever, in generally in line with what the expectations were. The manufacturing cost, increase in the cost, if it's more than 10% only, we can be able to pass on that, but not under 10%. So here it is. There is no passing on to the customer, so it's very difficult to pass on, especially the utility costs and the manufacturing costs and all that stuff. But in general, the costs, as I was telling you in my earlier things, that this year the costs are because of various reasons, not the normal circumstances, because of the COVID, various indirect costs have gone up. And when this will be out, we don't know, so we cannot really give a estimate. But in general, as I was telling you, our range is at 35 to 40% EBITDA margins, always been, and we will stick to that.
So, sir, these costs should normalize as we go ahead, or at this point in time, we don't have much of clarity on it?
Let me explain this. Only for this quarter, if you really see, the raw material cost has gone up by almost 20%. That's what Mr. Just was explaining, product mix, plus, certain cost elements that has gone up due to various other reasons, actually. And there was also an increase in the manufacturing expenses only for this quarter that has gone up. Otherwise, on a year-on-year basis, if you look at it, actually, there was an increase. That is because of the increase due to this quarter. Overall, it is less than 30% in relation to overall manufacturing cost of materials. And when it comes to manufacturing, it's about 13% of our total revenue. So which is like last year it was about 12.19%, this year about 13.07%. So the 100%, 90 percentage points it has increased basically because of the fourth quarter impact, which is really negative. Will it get normalized? We need to see over a period of time. We will not be able to quickly jump to conclusion that actually next quarter will be similar to the previous quarter or some kind of thing. Let us wait for maybe 1 or 2 quarters. And then if the price gets stabilized, then we will know what is normal. Hope this is clear.
Yes, sir. This is very helpful. And so, I mean, if we look at our overall for the full year, the core CRAM base has increased from a pharma CRAM perspective. So how should we look at this going ahead? And if you could highlight some drivers here, and do we see any new commercialization coming over next 12 to 24 months' time?
Months' time, please.
So the core CRAMs, that's what this year is a pretty good growth. I think, how do you look at that?
Yeah, the core CRAMs is, we expect that to grow at least around 10 to 15% range based on the feedback I have from the customers. And but at the same time, this pandemic should not affect us in terms of the logistics, the shortage of raw materials, and even now, in the second wave, we have some delays, about 15 to 20 days delays, and I hope that we will be able to compensate before the end of the year. But if something happens again in the second quarter or third quarter, we cannot tell. But based on the customer feedback, the CRAMs will grow 10 to 15%. Minimum.
Thank you, sir. That's helpful. I'll join back with you, sir. All the best. Thank you. The next question is from the line of Ranveer Singh from Sunidhi Securities. Please go ahead.
Yeah. Hi. Thanks for taking my question. Sir, on guidance front, you said core CRAMs should grow by 15-20% in FY22, right?
10 to 15%, I think.
Okay, 10 to 15. Okay. And in other segments, any guidance like specialty chemical earlier you said would remain flattish, so we go by this?
I think the specialty chemicals will be more or less 5% this year, that way, because that's a very steady state. And in terms of the formulations, about 10 to 20%.
Okay. And in capex, how much capex we have done in FY21 and plan for FY22? Out of 600, you have overall capex plan?
As you know, since we have thought of this spending the money, the COVID has gotten into it. Even the amount of 320 crores which we were supposed to spend on the old budget, we only spent about 302 crores. And there are still 18 crores to be spent again, and a lot of stoppages, people are not coming, and we are not also forcing them to come because our production is the main target, not the expansion parts of it or whatever it is. So as far as the new 600 crore capex is concerned, we have not even started yet, and that will be started in the second quarter. We'll be budgeting it.
Okay. And last one, in Rising Pharma, what has been the contribution in this quarter from Rising Pharma?
The Rising Pharma for this year, you mean only for this quarter? It's already there, right? And that's 18.66 crores is the contribution from Rising Pharma for this quarter. And for this year, it is about 53.73 crores.
Any element of profit is there which remains to be booked, which may come in subsequent quarter out of sale from Rising Pharma in this quarter?
Rising is as reported. This is up to 31st March. Whatever is reported, the 25% of this what is taken on an accrual basis. There is nothing called unreported here.
Okay. Fine. And the last one, just wanted to understand that manufacturing expenses. So 10 crore delta from Q3 to Q4, that I was not able to understand because the sales has been flat. So where that additional 10 crore was spent?
Okay, that is based on the product mix.
Okay, so as a percentage of other than CRAMS business, their percentage has been higher. That's what you are saying. This is okay. Fine. That's it from my side. And all the best, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Jeevan Patwa from Candy Close Advisors. Please go ahead. Jeevan, your line is in the talk mode. Please go ahead with your question.
Hello.
Jeevan from... Yes,
Yeah.
we can hear you. Please go ahead.
Yeah. So I have only one question on the formulation side, so A&D side. Is there anything that we need to book from the sale on the A&D sale? So typically in our business model, it's on the cost basis, and when we get the profit, then we basically book in our books. So is there anything which has been yet to be booked on the A&D side?
No, as far as the AD is concerned, this quarter it is about, AD and services all put is about 12 crores. Compared to previous quarter, yes, it is lower, because it cannot be measured on a quarter-on-quarter basis. Last quarter it was 23 crores. This quarter it's about 12 crores. And there is nothing unbooked kind of thing actually. We will report as and when, of course, some of them, whatever we have dispatched, the profit realization will happen because cost plus whatever is there, that is the expense. The profit realization will happen at a later, it could be next quarter or possible later actually, based on the realization of the from the customers.
Okay. Thank you, sir. That's it from my side.
Thank you. The next question is from the line of Keshav from Raksan Investors. Please go ahead.
Hi, sir. Thanks for taking my question. Sir, could you give a breakup of margins and or asset turns between pharma and the special chemical verticals?
No, we are not, providing, segment-wise split of the margins and profitability.
Okay, fair enough. Sir, the ongoing capex, is it for which vertical is it specifically, or it's a mix of verticals?
See, it's a mix. The thing is that right now the capex, the ongoing capex of 600 crores, of course, that is we expect to begin. That's what we have said that. When it comes to the past one, which is about 320 crores, it constitutes all the places, which includes the formulation, which includes one of the blocks in our facility in Pashmanara, which is intermediate API. The other one is in JNPT Vizag, which is also a multi-product facility. So after the total 320 crores, what was budgeted, we have already spent about 207 crores. We already capitalized about 207 crores. And pending capitalization, about 96 crores in the form of capital work in progress. And the balance 17 crores to be spent, probably that will be spent. Of which two of the facilities are commercialized. One is safe to be commercialized.
Okay, sir. And sir, for your formulation vertical, sir, is there a differentiation strategy that you follow vis-a-vis your competitors, and what kind of growth do you foresee in the next 3 to 5 years from this one?
No, in the formulation, we are doing the products which are very niche in the sense volume-wise, where not many people will enter. With very low volume brand value products, which we sell on a profit share basis. So there is no budgeting for that, and we call competition for this. That's what the target is. Have less competition. That's where the target is, and the values and volumes are not big enough, so that big boys will show up at the doorstep.
Okay, sir. That's it from me, sir. Thanks a lot.
Thank you. The next question is from the line of Sharad Reddy from Unifi Capital. Please go ahead.
Yeah, thanks for taking our question. So on the pace of new research projects, could you provide your comments, and what is the total number of projects as of now?
Yeah, see, the thing is that we have dispensed way of giving phase-wise, because they keep changing and quarter-on-quarter basis, and also not giving you correct guidance. So we are going by the revenue generation total times. So that's what we are giving now.
Yeah. So no, you had mentioned that previous year there were some disruptions in conversations, especially new projects. As it picked up, instead of giving a quantitative or qualitatively, as the conversations and signing of new projects picked up.
The conversation started, the reason being the COVID. Nobody can travel unless they come here, and so this will be delayed further. Background work is being done, but the active work is not being happening. I think when we had talked in February, that time this COVID situation was not there, but that time the situation in other countries are much severe. But now the situation in India is bad, so they are not able to come. So it is going on the background because it's the same customers who are working with us in the front-end products. So it will go on, but as I said last time itself, it takes 2 to 3 years before you get any concrete results out of this initiative.
Okay. So in terms of commercialization pipeline, at the start of the year, we had 6 ANDAs that were approved, and I think we have commercialized 3. Can you please correct me if I'm wrong? So, was there any new commercialization that happened in Q4, and also any new filings, any new ANDA filings in Q4, and how many ANDAs do you expect to commercialize in FY22?
Yes, 6 approved. Out of that, 5 we were distributing until last quarter. This quarter we have added 1 ANDA, that is animal nutrient application. Just started 1 shipment. So it is 6 is there. Another 6 are yet to be approved, and we hope some of them will get approved within fiscal 22. And we have filed another 5, which is waiting for approval. Then again, we are about 5 to 6 will be filed minimum during the year 22, fiscal 22.
Okay. And in terms of both commercial CRAMS and specialty CRAMS, you had mentioned that there is a possibility that 2 more specialty chemicals could be commercialized, and also one more pharma could be commercialized. So is that on track?
No. On the specialty chemicals, 3rd one we just started in the 4th quarter shipping initial quantities. So that is the other one. I didn't say it's a commercial opportunity. That's a developmental product. Out of the 2, 1 is a commercial, 1 is a developmental. So now 3 commercial in terms of the specialty, 1 developmental. In terms of the CRAMS, no, not yet. Nothing has come into the commercial operations. But the things are going with this situation. 1 or 2 maybe, that 2 in 23, not before that, because these are all COVID-related activities, and they are all in their phase 2s and what stage. So if everything, because of the accelerated approval process, if everything goes well, sometime in 2023 maybe, calendar 2023, beginning and end of 22, it will have an approval process.
Okay. So now that we have commercialized 6 ANDAs, so the acceptability in the market is going to determine the volume growth, plus the profit growth would it follow? So is that what you're monitoring with your customers?
These are all small volume niche products. Not many people are there telling you. These are initial stages, and because of this COVID situation, we are not able to gauge, because everybody is concentrated on the COVID-related products, even the distributors and all that stuff. So not much inputs are given, and the wrap-up is also not happening that aggressively at this time for those things which were launched.
Ms. Jastri, at the outset, you made a couple of comments. Can I take you back to that? You said that there is an increase overall in costs and that explains the slight lag between top line and bottom line. We also said that the outlook for this year seems fine in terms of your visibility, whatever you have from a business perspective. I presume that refers to top line. And the bottom line, I guess, is again a factor of material prices and logistics and so on. So could we just focus a bit on the top line, and could you give us some sense of how you are seeing for the full year the top line evolve?
As you know me, and we never give the whole year guidance because we do not have the visibility more than 6 months. But based on the feedback we have, things are the traction is much better, and things are all going well. And as I said, the situation is that if everything goes well without any effect post June after the phase 2 of this COVID, I think we expect to go 10 to 15% growth, and that's the best estimate we are giving, but not on the actual estimate. That's the best estimate. Hopefully that nothing will derail us with another set of COVID coming in a couple of months from now, as everybody is suggesting. Without that, I think we expect to go 10 to 15% minimum.
Okay.
Thanks. I will join back with you. Thank you.
Thank you. The next question is from the line of Vineet Gala from Monarch Networth Capital. Please go ahead.
Hi, sir. Thank you for taking my question. So you mentioned that 35 to 40% EBITDA margin is something that we can expect, which is lower than our historical performance. And given the increase in formulation, where we have profit share hitting the EBITDA, shouldn't be the blended EBITDA margins improve from the current level?
So that is the guidance we are giving. That's the minimum we want to achieve, and that's been consistent over the years. And if we achieve better based on the product mix and the mix of various verticals, that would be good. But I cannot give you based on this because especially on NDA-based activities, we thought this ramp-up will be much better. But something happened in the COVID situation, and the ramp-up is not that great. So I cannot tell, but what we are telling is the minimum what we can achieve. Over and above, it is good for everybody. We cannot give a guarantee at this time.
Yes, sir. Fair enough. So also on the spectrum side, we had 2 incoming molecules, right? So what can be the contribution on top line on these 2 new molecules?
Yeah, so these are last time also telling that all the maximum when it go to full commercial within 2 to 3 years, it will be about $8 to $10 million per product on the top line growth. So this is third one which we are doing it, the same thing. Start with a couple of million to 5 million like that. So maximum tops of 8 to 10 million.
Perfect. And so like
the old one where we have about $25 million top line.
Got it. So and when are these expected to commercialize?
No, we just started shipping the initial commercial quantities last quarter itself. That's what I was telling before. So now we have 3 commercials in the specialty chemicals.
Perfect. So, sir, like, is there any kind of degrowth on the current days, like excluding these 2 molecules? On the current days, are we looking at any sort of degrowth, or is there some kind of?
As of now, with the understanding from the customer, for 1 to 2 years, it's the same. There is no degrowth. The maximum you can expect 5% growth at this time. Other than that, we don't see any degrowth.
Fair enough. So my last question is on the formulation side. So, sir, like I wanted to understand as far as the products that you are entering, these are very niche molecules per se and very small in size.
Niche in the sense not on the other way around. It is only because of the very less value and volume and brand, which where not many people will be filing the and handle. This is a leverage exercise we started with, and since this being a profit share basis, we expect a little bit better margin on that. Unfortunately, things did not move the way it's supposed to be. Not repeat business system and launches going up and all that stuff because of the COVID situation. In general, these small molecules are not highest priority for them, but they will come back. They will come back after this thing is over.
Perfect. So, sir, my question was more on the long-term perspective on this business. So, would kind of like picking and choosing these niche molecules, how many of such molecules will be there in the market which are not contested and small in size, which are easy picking? So, like over next 2-3 years, I think you'll get some opportunities. But beyond that, what would be the strategy on formulation for us?
As I said, not more than 2 to 3 people in the market for every molecule that we choose. And some of them will have eventually some additional features in the NDDS kind of things will come into the picture, which sometime by 2023 time frame, then the valuation will be much better. So these are the kind of things which we are working on.
Fair enough, sir. That's it from my side. Thank you so much.
Thank you.
Thank you. The next question is from the line of Venkat from 3 Sigma Financial. Please go ahead.
Thanks for the opportunity. Sir, one question that I had in my mind is, yes, this year, several companies are impacted by COVID and probably they are impacted financially as well. So, for financial 23, are we going to have the same kind of growth that we saw last financial year, 20% and above?
It can be that much or maybe more or less. I cannot tell because they were telling you, not you, in general, our visibility is only for the 6 months. These are all the molecules which are in the clinical development except those commercial ones, which we will not be knowing the results until the results are out and going forward is not in our hands. It's all data driven, so it's very difficult. But can happen like if we see last 4-5 years, some years it can give you 40-42%. Then suddenly it will stay there for a year or two. Then again it can grow. So that's the way it is. So I can't give you.
No, my thought is more from the structural side. So there are no major structural changes because of this COVID or whatever. So the projects will not be impacted because of this 1 month or 2 months, whatever we are impacted by this COVID. I'm just trying to understand from that point of view.
The structure side is only temporary, but what we are talking about is our structure. Structure is based on the success of the molecules in the clinical trials. That has been the way it works in our business model. So the structure, yes, it has a temporary effect, but in general, the success of the molecule is the one that gives us the longevity of the business.
Yeah, that's okay, sir. We are okay with that. Thanks for the answers. Thank you.
All right.
Thank you. The next question is from the line of Purvi Shah from Kotak. Please go ahead.
For the opportunity. So I would just like to understand.
You're not clearly audible, ma'am.
Is it better now?
Yes, thank you.
Yeah. So I just wanted to understand that, our CDMO pharma business for the year has reported very good growth. But when it comes in terms of our guidance, I understand that because of the COVID thing, you're trying to be a little conservative and give us a growth of 10 to 15%. So do we have this space of that post the Q1 numbers? Would you like to update your guidance? Because so I just wanted to understand what are the other things that you are considering and giving this a very conservative guidance?
I mean, you say that after Q1, can I give you the update on my projections? That's what you're asking?
Yes, sir. So what I want to understand is basically that the 10 to 15% growth guidance, is it conservative, and does it have a scope of increasing in the future?
Yeah, but what's the use of giving something which is not known to me? As you know very well, you've been dealing with us for a long time, and you know that our visibility is only 6 months. How can I give you more than that?
Yes.
I don't want to say something that I cannot keep promise on. So the minimum that I think I can deliver is being given. If anything is good, you could see from the whole history. That's good. But saying something, I'll do 25% and come back. What happened? Usually I don't give any guidance. Last year I said 20% growth on the bottom line also, but could not deliver goods, isn't it? So I don't want to I want to be very cautious, and if something comes good, it's good for everybody, not only me and all the investors and all that stuff. And also there are so many variables, including this new pandemic variable. So we have to be doubly careful on that. But in general, looks good, and the traction is good with the customers.
Fair enough, sir. Appreciate your answers. So the other thing also I just would like to pick your brain on was the margin front. I mean, the gross profit margins have been impacted by almost 200 basis points for the year. So I understand a lot of it would be mainly related to the COVID thing. So given the situation where things settle down, can we expect it to be back to those levels in a period of a year or two? And what is the can we expand it also further?
It's always a possibility, but at this time I can't give you a guarantee on that. There's always a possibility because with the product change mix and with the pandemic out of the picture and the raw material costs not going up, other logistics costs not going up, and the continuous production of some of the commercials that taking place 2 years from 3 years from now, yes, certainly it can go up. And if you see last 5-6 years, you can see those troughs and valleys, and so things can happen. And when it happens, see, when you're going it's not a low, as you go every year, it's a higher base we're talking about it. So it is keeping at that level itself is a tough task, and giving a growth on that also depends on various parameters. But what is the minimum I'm telling you is based on that feeling I have as of now, hoping that everything goes smooth from now onwards. Are you there?
Yeah, I'm done. Yeah, I'm done. Thank you. All the best, sir.
Thank you.
Thank you. Ladies and gentlemen, we would request you to please limit your questions to 2 at a time. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Ankush Agarwal from BPI Research. Please go ahead.
Yeah, hi everyone. Thank you for taking my question. So firstly, in last year you had mentioned that by 2023 you're targeting that 1/3 of our profit should come from the A&D business. So do you still think that would play out?
As of now, we still feel that even though this is blip here, and it should come to that level, but 2 years from now.
Okay, so that guidance of 1/3, is it largely dependent on the 505 2B kind of molecules that we are targeting in FY23, or the smaller molecules itself will be able to reach at that level?
It's not a 505B2, but some other molecules with niche technologies that is involved, and those kind of stuff, and also the product mix also.
Okay, got it. And so one data question, can you give me how much was the profit share and royalty, including the total formulation sales of 80 crores this year?
We are not, because it's a very small amount and it is not on a regular basis, so we are not giving breakups on this anymore. We have discussed it 6 months ago, 9 months ago.
Okay, fine. Okay, that would be all from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Jinal Sheth from Omega Capital Advisors. Please go ahead.
Good afternoon, team. So in the last call, when the discussion on CAPEX was there, you had mentioned that you would be giving details of the same in probably the next call. So are we in a situation to kind of talk about that?
As I was telling you, since we talked that, then we got into the mess of this COVID-19 too. So we did not, because even the existing things are not going smooth. We are not allowing other than the production people, other than the employees to come into the facilities and all that stuff. So we have not finalized it yet, not getting the quotations also from the customers also. So that's why I told in the beginning of my call that it will be sometime in the second quarter we will start doing things. Because these are all only, as I said, one is a replacement, one is a movement, one is only thing is for the future expansion based. So it's not in a rush, but at the same time we have to plan for it and we plan for it, but unfortunately did not start the activity because of the various reasons related to COVID.
Okay, thanks. And my last question. So I just wanted to understand that one way we do mention that we have like a 6-month outlook, but obviously somewhere when we are doing CAPEX, we have a broader sense of the demand direction. So, there is a fine line between the two. So obviously when you do talk about guidance, I presume there is a mix of both. Is that right?
When it comes to the CAPEX in Suven, it has nothing to do with the production-based activity, to be honest with you. And as I mentioned, out of the 600 crores we're talking about, one is the relocation of the R&D facility that has nothing to do with any projections for the customer. One is the replacement of 35-year-old block that has nothing to do with the customer. Only one part of it is for the expansion. And more than that, the expansion is not necessarily for the creation of the additional capacity alone, but also it gives us putting some of the requirements of the customers like OEL4 facilities and continuous flow chemistries or something like that. It's all the requirements. It will give you certainly some capacity addition, but at the same time it is meant for the customer-based request. This is, as you know, these are all the projects. The commercialization takes 3 to 4 years from now, but the infrastructure has to be created upfront. That's why you cannot correlate between our CAPEX versus our sales or projections, especially in Suven. This is all mainly related to the upgradations and new requirements from the customer's point of view. And of course, naturally, when you do new things, you will have the additional capacity created also.
Appreciate your inputs on that. Where what I was trying to ask is generally not more to do with CAPEX, but generally when you mentioned time and time again that we have a 6-month kind of an outlook on the order book, but generally
only on sales aspect.
Yes. Okay, but okay, fine. Thank you.
Thank you, sir.
Thank you. The next question is from the line of Charulata Gaidani from Dalal & Broacha. Please go ahead.
Yeah, my question pertains to the recent approval that Biogen has received. The manufacturing will come into the APIs or in formulations. And secondly, whether any milestone payment will come into Suven Life Sciences?
You're talking about the recent FDA approval of the Biogen molecule for the Alzheimer's?
Yes.
It's nothing to do with Suven, madam, and it is totally different molecule. And they have done their launching. They got the approval which they'll be launching based on the FDA approval, which they did some fast track kind of thing for Alzheimer's.
We are not involved.
And we are not involved in either development or manufacturing or any of the things in our CRAMS business.
Oh, okay. Yeah, fine. Thank you.
Thank you. The next question is from the line of Sanjay Satpathy from Ampersand Capital. Please go ahead.
Yeah, sir, basically most of the pharma companies are taking advantage of the urgency to fight pandemic, and very hardly any company have really been impacted or are so much negatively talking about the prospects. So has there something structural that has happened for Suven, contrary to most other companies in this space? Can you just help us understand that is Suven so different compared to any other pharma company that the pandemic is negatively impacting it rather than helping it?
First of all, we are not in the formulation sales in India, so I cannot compare with themselves. Second of all, I didn't say the whole thing is due to COVID, but the only thing is COVID has an indirect effect on it. And it's only one quarter we are talking about it, and you are generalizing only say Suven is different. Yes, Suven is different. We don't do any stock and sale items. We do it only for the innovators during the clinical phase of the drug development. And I clearly said it is the product mix, and quarter on quarter you cannot equate it, but year on year, yes, you can do that. But the people, they are not telling that it's not due to the COVID. Maybe they are not got affected because the raw material prices based on the products which they are not in generic in nature has a different raw material requirement, which sometimes the prices has gone up sky high because of the oxygen shortages and all that stuff, and also 20% absenteeism that gives you more headaches in the putting people in and extra costs, and also logistics support and delayed shipments and increased inventories. All these things causes. Okay, so we are not different, but at the same time, yes, we are different.
Understood. So if it is just a one quarter phenomenon, particularly when the pandemic is ebbing, we are our single focus in discussion is pandemic and its impact. So that makes us feel that maybe like something structural has happened, because it is everybody is talking about the situation getting normalized, but from your tone it looks like you're still in thick of things.
Did you realize that the second pandemic wave will come in last December? You did not. And today everybody talking about third wave. I'm just being cautious, and I don't want to give high hopes. We will deliver goods more than what we promised. And you have to see last 10 years of what we have done. So I don't have to tell the rosy picture, but I'll be cautious.
Understood. The last thing, sir, while your costs have gone up, and considering the unique nature of your business where you do bespoke work, do you have the wherewithal to pass on the cost to your customer?
I was telling earlier, if it's more than 10%, then we'll pass on 50% of that. But if it's less than 10%, we have to absorb it. Understood.
But then that will kind of help you build up a stronger relationship with your customer, I assume.
Yeah. That's what the specialty of Suven is all about, having people working with us more than 2 decades.
Thank you. I would request the current participants to come back and keep a follow-up question. We would also request participants to limit your question to one at a time now. Thank you. The next question is from the line of Darshit Shah from Nirvana Capital. Please go ahead.
Hi, sir. Thanks for the opportunity. So, sir, my question is pertaining to what we said. We have one or two molecules in pharma CRAMS which probably might come up in next year or so, and maybe most of them are usually related to COVID-related drug and then might get an expedited approval. And in the history also, we have seen that whenever we have one or two molecules coming in commercial pharma space, then the profitability jump is good enough over the next 1 or 2 years. So, sir, is that a possibility, if at all, with a caveat that they might be approved or they might not be approved?
Oh, yeah. There's always a possibility there. But as you said, it is a 0 to 1, right? No in between. So if it's approved, then you can get it. And compared to, because now so many drugs are being developed and so many will get fast track approvals. So how it will fare in the market is also determines the volume and the profitability. So yes, it's a very high probability that we can make good money on that, but at the same time it is a zero probability if it doesn't make it to the next level also. So we will take it as and when it comes. So I cannot give what you can estimate based on it will happen. It is likely to happen. I can give the timeline, but will it happen or not, I don't know.
Thank you. The next question is from the line of Nikhil Jain from Galaxy International. Please go ahead.
Yeah, good morning, sir. So just two questions actually on a broad side. One, are we actually supporting the innovators for contract development and manufacturing of oncology products?
What is it again?
Are we supporting the innovators for contract development and manufacturing of oncology products?
No, some intermediates are there in the development, but not in the final stage.
Currently, we don't have facility for manufacturing the oncology products, right? And that is where we are setting up this low OEM facility.
Yeah, for oncology products, not all the intermediates require the specialty. What do you call it? Yes, I don't have the facility, but not all the intermediates require the high potency facilities.
Thank you. The next question is from the line of Abdul Kadir Puranwala from Anand Rathi. Please go ahead.
Yeah, hi. Thank you for the opportunity. So just back to the revenue growth guidance on the specialty chemicals. So when you say it will grow 5%, does that include the third product which you have commercialized, or this is largely on the base of the other two products what we had commercialized earlier?
Yeah, this includes the new product, but it's not a volume-driven product. And at the same time, the old products, one of them is a real old product, so the volumes also 5% this year that way. Compared to that volume, when you add this one up, and the top line growth, as I said, it's around 5%. That's why.
Thank you. The next question is from the line of Akshay Sam from Sam Capital. Please go ahead.
Yeah. Hi, sir. Just a couple of questions. Do you think the recent approval of Biogen's Alzheimer's drug is going to lead to a tsunami of money coming into research in the CNS segment? And since we are kind of experts in the CNS segment, is it going to benefit us?
As you know, tens of billions of dollars are spent on Alzheimer's drugs. Since 2003, there is no new drug has come. And also the controversy related to this Biogen drug also, you know it. So just because it is approved, because there is nothing is there, doesn't mean that unless the success happens in the clinical trial, not much will happen. Yes, there is always a possibility. There is always a big push that comes into the picture, but at the same time, you need to have a data. In general, yes, there is a lot of emphasis on the CNS segment. Only problem is it is being it doesn't have a clear endpoint. These are all suggestive endpoints. It has high attrition rate, especially things like Alzheimer's. Last 18 years, 19 years, there is no new drug. It's very difficult to meet the endpoint. As you could see in our life sciences, our 502, in preclinical it showed very good, but it did not give statistically significant results, even though it's very efficacious, very safe in terms of all other aspects for the long-term usage. So yes, there is a possibility, but anyhow, that has nothing to do with the Suven Pharma. That is to do with the Suven Life Sciences.
Thank you. The next question is from the line of Sachin Kasera from Swan Investments. Please go ahead.
Good afternoon, sir. Sir, this 330 crores ongoing capex, can you give us some sense when we can start seeing some revenue contribution from that? S2 should be a fair assumption.
For the ongoing capex, what? 320 crores of capex. Oh, yeah, these are already, except for the formulation, both these things are already commercialized. One we are using the specialty chemicals already. And some third compound has been come. And things are, the other one is another block in Pashamala, which we are using it. That was happened last year itself, which you have mentioned in the September time.
Sure.
And January time.
Yeah.
Thank you. The next question is from the line of Rahul Teja from Multi-Act Equity. Please go ahead.
Yeah, thanks for the opportunity. Sir, I wanted to clarify a couple of things. So firstly, on the specialty chemical segment, we said that we have launched the third molecule in Q4, and at the same time, we have guided for a flat kind of revenue growth next year. So the contribution from this new molecule, is this expected to be immaterial, or you are expecting some decline in the base business?
You see the last year, there is a decline in the earlier molecules and came back a little bit with the second molecule coming into the picture. So we're taking some decline in the earlier molecule, and as I said, that this is a very small volume to start with the third molecule. So even 5% is a good growth, so we figure it. So it's a combination thereof.
On the ANDAs, you said that we have 6 approved ANDAs as of now. And so how many of these 6 have been launched in the market?
6 of them.
Okay. And so when do we start the profit share to start accruing to us?
Yeah, already started small weight profit share. See, this is happening more than a year now. Only this quarter, last quarter, this ANDA, it's not ANDA, it's ANDA is launched. It's a small volume. And usually there is a lag of 5 to 6 months because it has to go, then they have to distribute it, then they have to get the sales and the profit share, and it's a 5 to 6 months lag for every shipments we do, minimum.
Okay. So incremental contribution that is expected to come from these molecules profit share in FY22, is that included in your 15% growth guidance?
Yes. Always it is a catch-up situation. No, not only for this year, anytime when we take this in combination thereof.
Thank you. The next question is from the line of Rahul from Shefa Family Office. Please go ahead.
Thanks for the opportunity. My question is on this professional management, the CEO appointment. So where we stand on that? And second question is on the scientists on our payroll last year versus this year ending March 2021. And my last question is on this CDMO landscape. I mean, we could not hear anything specific in presentation. Would you be able to comment on it, like how the opportunities or talent in the sector looks 5 years down the line? I mean, how it is earlier and how it is changing right now. Thank you.
What is the last question again? Tell me this last question again.
So I'm asking about some your commentary on CDMO opportunity, specifically the current situation of China Plus, or the kind of opportunity we are foreseeing in terms of growth in the CDMO space.
Yeah, as I was telling, it's based on the feedback from the customers. There is a very good traction. But at the same time, the space with which we are in is in the developmental aspects of it, not the generic aspects of it. So I can give you much guidance if it's a generic-based activity, but when it is a success-based activity, it all depends on the success of the molecules in the clinical trials, and then we'll be getting the next level of opportunity. When it comes to the other question on the CEO, professional CEO, it's very difficult to get some with this mindset and taking this forward. And a couple of people we looked in the US also, and we are not able to get these people on board because of the COVID situation since 1 year. And we're also waiting for the right candidate to come in because it has to be a long drawn process. I mean, not for 1 year or 2 years, no. So we're waiting for the right opportunity to take the right person. So it's not that easy, yeah, but we're still looking for it.
And you asked one more question in between actually. What was that? It was a little long question.
That was about number of scientists on our payroll compared to last year.
Yeah, there is no difference. I mean, there is an increase in the lower end people, maybe by about 5%, but our number of people are same. Total scientists in our organization is 250.
Thank you, sir.
Thank you. The next question is from the line of Mehul Shah, a retail investor. Please go ahead. Mehul Shah, retail investor, your line is in the talk mode. Please go ahead with your question.
Am I audible?
Yes, you are.
Sir, I am a retail investor. I am not a fundamental technical guy. So my question would be in the length. So please listen carefully and give me the appropriate answer. Would be appreciated and obliged. It is a story. Just listen for 2 minutes. One day, one of the best banker did a conference call with earnings on conference call with the people or investors.
Sorry, we lost this line. So we'll move to the next question, which is from the line of Neha Agarwal from Stage 1 Investments. Please go ahead.
Thank you for the opportunity. So, 2 quick questions. One is on the formulations unit in Pharma, madam. What is the capacity utilization currently?
The existing formulations is fully utilized. The new expansion now it's under the validation. So there's no and for the future projects only. But for the present one, we have enough capacity. We are using more or less 100%.
Okay, so then the new approvals that we would be expecting in FY22 plus the growth from the existing ones in FY21 would be taken care by the existing one only?
No, we are expecting 1 or 2 to come from that side also. And as I was telling you, the existing ones which we have launched also, as I said, the traction is not that great, and we'll know only another 3-4 months from now how that is faring. So it's a combination to put together.
Understood. Also, there is one question which is not related directly to your business as of now, but just wanted to understand with respect to PLI 2 scheme of the government. Can we expect to, or are we evaluating doing something there in terms of new capex? Because the current capex that you announced, as you rightly said, is not directly linked to capacity expansion. So can we expect something to be done there with respect to leveraging that opportunity plus expanding the capacity?
No, because it's not in our line of activity, because they are mainly for generic purposes and for the intermediates, for the generic molecules and all that stuff, and we are in the innovation supply chain, and none of the products meets our requirements. Because as I said, we don't have any stock and sell items per se. Everything is on a collaboration basis, except the ideas which are on the profit share basis again.
Understood. Okay. Thank you.
You're welcome.
Thank you. The next question is from the line of MS Rajashekar, an individual investor. Please go ahead.
Good afternoon, sir. I am an individual investor, Mr. Venkatesh Jasti. Thank you very much. I've been an investor with you for over a decade. I've really got benefited. Thank you so much. My question is, everybody is going in for the biologicals and biosimilars. Is Suven also thinking in that line?
No, sir. It's not our cup of tea, and you have to have different skill sets and time frame and all that stuff. So we are not that big to go into straight away put a lot of people and money into that, and we are at this time no.
Thank you. The next question is from the line of B.T. Vainathian, an individual investor. Please go ahead.
Good afternoon, sir. Congratulations on achieving 1,000 crores in sales. It's been 7 years down the line, and now I expect the Dil Mange More, 1,000 crore in profit down the line. Sir, if I'm allowed to ask this question, this US FDA approvals for the plant, how do they now give it? Because say if they are not able to come physically to inspect it, so does this mean that the next FDA inspection, suppose during this COVID phase, is that approval is still continued, or do they have to still come and approve it, and then only you all can Suven can continue with its projects or something like that?
Yeah, our approval has happened last January itself, and usually to transfer at least, usually they don't visit the facility until 3 years is over, so we have no problem on that part, facility-wise. But if there is a specific product approval is required, nowadays they are doing in the online, based on the old records they have taken, only the paperwork they are seeing it. They are also going to see the online visual data, inspection also by Zoom or something like that. If it's a requirement is there for a product that is to be launched immediately. I don't see any problem on that. The existing approach continues unless there is a product that needs to be launched, and if it requires the approval, then only they will come. And there is ways they can do the remote online things also if needed, but otherwise they can send people from this country. They have the people here in this country, they can also send them. So as of now, no problem, and things are valid until they come. It's not that it will, it's only based on their availability they will show up, other than when the product is to be added.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand the conference over to the management for closing comments.
Thank you. I have, before I hand over to CMD for his concluding remarks, I would like to clarify the first question in relation to the cash flow. The question was why there is a difference in the classifications of some of the items of cash flow compared to the last year annual report which was published, which is the annual report. So, we got a clarification that, some of them are due to audit, auditor's reclassification of this is based on in line with the current year figures, which is 2021. So these are the groups that we like, finance costs, receivables, exchange fluctuations, and the capital advances, and a few other things. It wasn't purely regrouping effect. Other than that, there is no change in the cash flow overall. It just regrouped in line with the current year. Thanks for asking that question. Hope it is clarified.
Again, thanks everyone for tuning in for this update on the results. And as I was telling you in my earlier commentary, things are tough. And somebody said it's only for Suven it is tough. Maybe we are feeling that way, and based on our business model and all that stuff, and we are hoping that this will pass sooner than later. And with the traction that is being there, and we hope to perform better, at least 10 to 15% next year, with the caveat that things will move smoothly from now onwards. And everybody stay home and stay safe, and thank you for tuning in.
Thank you. On behalf of Suven Pharmaceuticals Limited, that concludes the conference call. Thank you for joining us, and you may now disconnect your line.